I'm Max Keiser, and this is the Keiser Report. You know, those scoundrels are in Davos talking about different weapons of mass financial destruction and how to destroy the world economy when it all comes down to pickle juice. We're going to be talking more about pickle juice shortly. First, let's bring on Stacy Herbert. Hello, Stacy.
Hi, Max. Yes, you mentioned Davos, and there was something that happened at Davos that is worth our talking about here. The headline reads, Sarkozy goes postal on Jamie Dimon, says bankers made world into madhouse. So this was at an event in Davos, and what happened is Jamie Dimon spoke first, and he praised governments for intervening to save the financial system in 2008, but then said, and he referred to Sarkozy, that the G20 group of major economies, which Sarkozy chairs this year, should take a deep breath before imposing regulation. Jamie Dimon said, too much is too much. Not all banks are the same. I just think that this constant refrain, bankers, 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 is just unproductive and unfair. People should just stop doing that.
Yeah, I don't get it. JP Morgan caught inducing fraudulently in the mortgage market. They don't hit minimum capital reserve requirements. They are involved in massive numbers of terrorist scandals. Jamie Dimon sucking the financial integrity out of the U.S. economy. What do you mean enough is enough? I don't get it, Jamie Dimon. You know, you've been caught stealing money from Americans, stealing money from the globe, committing acts of financial terrorism, in bed with the terrorists. What do you mean it's enough is enough? Enough is not enough until you're in freaking jail! Jail! I'm sick of Jamie Dimon. Enough is enough of Jamie Dimon. Somebody shut this guy down!
Well, this is how President Sarkozy of France responded to Jamie Dimon. He said, quote, too much is too much. The world was stupefied to see one of the 5 biggest U.S. banks collapse like a house of cards. I don't contest the principle of securitization, but when one offshore country guaranteed 700 times its GDP, are we in the market economy or in a madhouse?
Sarkozy is absolutely correct. And I want to direct Jamie Dimon's attention to what's happening in Tunisia, Algeria, Egypt, Athens, Dublin, the global insurrection against banker occupation. People are angry and they've got their pitchforks. They've got their torches. They have historically used guillotines when people like Jamie Dimon get into the mix and steal with impunity. That's wrong.
Well, Max, it's not just us who think this, and it's not just Sarkozy who thinks this, and all the people rioting around the world. And now a congressional committee, the Financial Crisis Inquiry Committee, has also found these very same people guilty. So the next headline is, Financial Crisis Was Avoidable, Inquiry Finds. Of course, we all know that.
Yeah, of course it was avoidable. If you give a gun, a loaded gun to a maniac and you point it, he kills people with it. If you didn't give him the loaded gun with the bullets in it, he wouldn't have killed people. It's avoidable. If you give the bankers all this free money at 0% interest rate, and whenever they make a mistake, you bail them out, it's a recipe for disaster. Of course, they're going to commit acts of financial terrorism. Right there at the Fed, right there at the Treasury, right there in the White House. They give them 0% interest on all the money they want to commit all the acts of terrorism they want. And whenever they make a mistake, they get bailed out. Of course it's avoidable. Of course it's avoidable. How come they're not in jail? How come there's not drones going over Davos right now and taking these guys out? They're freaking terrorists.
Actually, specifically mentioned low interest rates as not being the primary factor in the collapse, because there were a lot more basically fraud and incompetence and failure to regulate. So they agree with Sarkozy. The commission that investigated the crisis casts a wide net of blame, faulting 2 administrations, the Federal Reserve, and other regulators for permitting a calamitous concoction, shoddy mortgage lending, the excessive packaging and sale of loans to investors, and risky bets on securities backed by the loans. They said, quote, the greatest tragedy would be to accept the refrain that no one could have seen this coming and thus nothing could have been done. If we accept this notion, it will happen again. And remember, two very well-respected Americans, Warren Buffett and Alan Greenspan, both said we couldn't have seen this coming.
Look, it's a complete lie. Many people reported on this thing that is coming, and the fuel that goes into the machine of fraud, the fraud committed by Goldman Sachs, JP Morgan, HSBC, Royal Bank of Scotland, all the banks in Ireland, fraud, F-R-A-U-D, committing fraud. The fuel that goes into that are cheap interest rates engineered by the Fed. Essentially, Ben Bernanke, you have to think of him as Osama bin Laden, or you have to think of him as any other terrorist. Okay, that's his role in this global economy. And the fact that he's allowed any oxygen at all is a sham. It's shambolic. And Sarkozy's absolutely correct. Although I would go a lot farther. Of course, in France, they have experience with these things. Go on Wikipedia and look up French Revolution.
Well, the majority report finds fault with two Fed chairmen, Alan Greenspan and Ben Bernanke. In particular, it criticizes Mr. Greenspan for advocating deregulation and cites a pivotal failure to stem the flow of toxic mortgages under his leadership as a prime example of negligence. So we can now say, Alan Greenspan is always on the news lately. He's always appearing in the mainstream media in America, telling Americans, basically whitewashing his own record and saying, he's somehow considered still an expert on how to run an economy, and his opinion is sought. So now we must say that they must fully disclose and reveal that this man has been found guilty of negligence and incompetence.
Yeah, Alan Greenspan needs a warning label like cigarettes. Cigarettes, it says cigarettes can cause cancer, and they have, pictures of people with rotting lungs. Whenever Greenspan appears on TV, you need a disclaimer. This man is a terrorist. Whatever he says is a lie. He's a pathological liar. So is Jamie Dimon. Jamie Dimon, JP Morgan, all the acquisitions they made during the crisis, they're responsible for tens of thousands of fraudulent mortgages that they fraudulently induced, fraudulently repackaged as securities, and then are fraudulently foreclosing on. It's a trifecta of fraud. This guy would get arrested going to the bathroom, Jamie Dimon. He can't blow his nose without committing a crime. He makes John Dillinger look like Mother Teresa.
Well, actually, I hear that there are several bathrooms in Brooklyn, in public bathrooms, where they say crash JP Morgan, buy silver.
Oh, yeah, well, it's the global campaign. Listen to me, if you're in Tunisia right now, if you're in Algeria, you're in Saudi Arabia, you're in Egypt, you're in Athens, you're in Dublin, listen to Max right now. Stop. If you're in the airport, stop. Listen to me right now. Buy silver and crash JP Morgan. That's the only way. You got to think of them like a vampire. And you got to drive that silver stake through their heart. They're short billions of contracts of silver. Their balance sheet's at risk. The more silver you take off the balance sheet, the greater the probability they'll go bankrupt. And then we're down one terrorist in the world. You got to do it.
Well, the Financial Crisis Inquiry Committee also found one thing that you've often talked about as well, as they also blame the decision in 2000 to shield the exotic financial instruments known as over-the-counter derivatives from regulation made during the last year of President Clinton's term. And they call it specifically a key turning point in the march toward financial crisis. And this is something that you've mentioned several times before.
Well, that's when I flipped on my issue on box office futures contracts, if you recall. And this is why we shut down Cantor Exchange's, the Cantor Exchange by Cantor Fitzgerald. We did our lobbying campaign on this show, and we shut that entire exchange down. So we've had great experience on this show. Cantor Fitzgerald, we shut them down. Cantor Exchange, because of the 2000 law, I invented it, but that 2000 law came along and it opened the door for a massive speculation. And I didn't think Cantor Fitzgerald could responsibly use my technology in this marketplace, so I shut them down. Now we're going to shut down JP Morgan. It's not that hard to do. We've got a great track record. You, the people, I'm telling you, the vulnerability, the key vulnerability, and this is how you take down a giant. You find that vulnerability. You go in there hard. In JP Morgan's case, they're short silver. That's their vulnerability. You hit them there really hard, and they will go down like a sack of beep.
So let's move on to the next headline, because all of this affects the U.S. dollar, of course, which underpins is the unit of fraud upon which all of this fraud is built. Richard Russell, get out of your dollar assets now. Richard Russell is advising people to swap your dollars for physical gold or CEF or GLD or SGOL. In other words, do as China and Russia and many other nations are now doing. Get out of your dollar assets.
Totally agree.
This is, of course, because of Ben Bernanke still in charge of the Federal Reserve Bank and the inflation that we see in the next headline, interactive map of recent food riots and price hikes. This is from Zero Hedge, and they show an interactive map disclosing all the recent documented food price hikes, protests, and riots. And as you can see, they're erupting all over the world at the edge of the American empire.
Oh yeah, this is funny, Stacy, because on the Business Insider today they had a headline saying the reason people are erupting in North Africa is because they're inspired by the liberation of Iraq. No, you spin-meistering apologetic morons. The people don't want to end up like Iraq. 500,000 dead civilians as America tries to steal another country's energy.
Part of the reason why I believe that these riots are erupting is not only the inflation, but also the fact that the U.S. empire is crumbling. And just like with what happened with Rome and the collapse of the Roman Empire, the barbarians were at the gate once they sensed that the empire was vulnerable and no longer able to maintain its empire and the outposts of empire. And I have two final headlines just to show the kind of ridiculousness and how kind of banana republic America has become. DEA rubber duck. This is the Drug Enforcement Agency, which is, of course, a crucial part of empire. Is this war on drugs is just like the war on terror. It's a way to defraud the American population. But here they're selling this bizarre rubber duck with big fat red lips to finance, I don't know, some contractor is probably down in Virginia somewhere.
I think the people who run the DEA are lusting after the Village People. If you remember that that disco group from a while ago, it seems like they have a leather fetish at the DEA.
It does look like that.
Yeah.
And also, you know, part of this whole police state, sort of a collapsing state, cash-strapped Bergen, New Jersey to fight snow with pickle juice. Yes, apparently Bergen, New Jersey cannot afford salt to salt their roads, so they're turning to pickle juice. The brine costs just 7 cents a gallon compared to $63 a ton for salt. So Bergen County has already used up $3 million of its $4 million snow budget.
Well, Stacy Herbert, let me warn you, never eat green snow. Okay, and that's going to do it for this section, portion, edition, first half of the Keiser Report. Don't go away, much more coming your way, so stay right there.
Welcome to the future, bringing you the latest in science and technology from around Russia.
We've got the future covered.
Welcome back to the Keiser Report. I'm Max Keiser. Time now to go to Sandeep Jaitley of BullionBasis.com. Sandeep, welcome to the Keiser Report.
Thanks very much, Max.
All right, Sandeep Jaitley. First, let's talk about the gold standard. There have been several high-profile calls for a return to the gold standard. Could it solve the world financial crisis?
It can solve the world financial crisis, but it can only solve the world financial crisis if its clearing mechanism is introduced at the same time.
All right, hold on a second. That sounds technical. What is a clearing mechanism?
Well, the clearing mechanism, Max, is basically the real bills market that's associated with the gold coin standard, and the two run together at the same time. Basically, a real bill is what a banknote was. It wasn't a receipt for gold in the warehouse. It represented gold on the move. And gold on the move has a different value to gold just sitting in bank vaults. So you can't have a gold standard without its clearing mechanism. And the clearing mechanism was the precursor to the collapse of the gold standard. The clearing mechanism was cancelled first. So this is an important thing to remember. You have to have the clearing mechanism as well as a gold standard.
Talking about the gold standard, of course, is considered by most to be a right-wing issue. What do progressives would look for in a gold standard?
You can look at it from both a right-wing and a left-wing perspective, and I think that sort of hard left-wingers as well would appreciate a return to honest money. So I think sort of in Europe you'd probably find that it's a more liberal element that supports a gold standard. The right and the left, both look at gold in terms of freedom, and they're both looking at it correctly, whichever side of the line that you stand on. So, gold is apolitical. It's a universally accepted medium for some reason. Let's make the most of it, regardless of our political persuasion.
Right. Well, I guess people would argue that the war is on the left, the progressives who are against the wars, and they're against a lot of what's going on in the corporate sphere. The point is that gold is a checks and balance on all this fiat money creation and in the corruption that comes in government. So to me, it seems remarkable that you don't have more on the left or more of the progressives arguing for a gold standard. Another technical point, which is in the market right now, people talk about gold and the price of gold, and they mention backwardation. Backwardation, what is it?
Backwardation is basically when the spot price trades at a premium to the next futures month, the next active futures month on the exchanges. So basically, anyone that has this stuff, whatever it is that's in backwardation, they can sell it for a premium in the spot market and replace it with a futures contract at a discount. Now, this shouldn't really happen in the monetary metals, gold and silver, essentially because there is so much of it around. So these metals should never go into backwardation, because effectively it implies that there is a shortage of the metal, or there's a shortage for trading purposes.
Okay, so in other words, if you look at the way the prices are occurring in the futures markets, and the futures markets are broken down into 3, 6, 9-month forward contracts, options and futures.
Well, the futures contracts, Max, are the exchange-traded ones, and the forward ones are done on the LBMA. Those are the bespoke 1, 3, 6, 12-month contracts. Okay, and the idea is that you are willing to pay more for time. Time has value, and so the price typically is higher. So when you see the price for the short term higher, it means that there's a tremendous urgency to buy the metals now. They're willing to pay up. Yes.
Right?
Yeah.
Now, this urgency seems to conflict with a lot of what's happening in the press that comes out of Wall Street. They're suggesting that there's plenty of silver and gold, that the campaign around the world to buy a lot of silver is not having an effect in draining those gold stocks and silver stocks. And yet, if you look at the market itself, it suggests that we're talking about possibly shortages in terms of availability for bullion, gold and silver, particularly silver. Do you see these shortages? Where do they show up?
Well, pedantically, Max, they're right, of course. There is no shortage of gold or silver because it's still there. It's not like it disappears into a black hole and, it's converted into energy. So they're right. There is no shortage of physical gold and silver. But the point is that, there is a lending market, Max, behind the physical bullion market. And that lending market is tightly knitted to the way that the futures market operates as well.
Okay, there's no shortage except at that price. In other words, the price discovery mechanism kicks in, and the price would go higher. So here we have silver, which made a new high going into last year, bucking $31 an ounce. And now it hits a downdraft, and there's a lot of supply coming into the market. But the futures markets are in backwardation, which implies that there's actually tremendous demand for that price. So
absolutely.
What's your take on this idea that the futures market is being flooded with a lot of paper silver, and a lot of that is being sold naked into the market that doesn't even have any...
Well, I'm sure that there is an element of truth in that, Max. I wouldn't be so naive as to deny that. But you have to remember that bankers are very cautious people. They tend to hedge their books. So what happens in a futures market typically is someone might buy physical gold or silver and sell forward, or the future, to earn a little premium, to carry the bullion. And basically, if you can't get a premium to carry bullion, which you can't with silver at the moment, it basically means that you have to lend it out in order to cover your overheads as a warehouseman, someone who just stores gold and silver. Now, if you have to lend it out, in order to make a living, basically, first of all, if someone audited your accounts, they would see no bullion in your warehouse because you've lent it out. And they'll see that you're short a futures contract, and they'll think that you're being illegitimate, but you're not, because one is over the counter and one is on a regulated exchange. But the books balance when the chief financial officer goes home for the evening.
Okay, but two points on that. You say number one is that what we find is that the amount of leasing and shorting and futures trading is in excess of the actual physical stock of the silver and gold. So to say, you're making a little income on your silver is a bit of a specious argument, because what we're seeing is 10 times, 20 times being in the paper market versus the physical market.
Well, this is the thing though, Max. I mean, so the consequence of that is if you see, for example, that there's only, let's say, there's 500 ounces of futures outstanding, I'm using broad numbers here, and only 10 ounces of silver at the exchange, you have to say to yourself, well, let's see what we can do. Let's see if we all call for delivery. Can that silver, can that gold that is kept on lease that's been lent out, can it be called back quickly in time? Can I go to the lending market and borrow gold? Can I borrow silver in order to satisfy people who are redeeming futures? And if they go to the lending market and they bid up interest rates well above paper rates, that's what causes backwardation, and it basically implies that there's a shortage of people who are willing to hand over their silver, to either lend it out or B, sell it.
Okay, now so I understand, okay, it's an anomaly in the market, backwardization, and you end up with this, but what you're saying is that this anomaly is occurring more frequently.
Absolutely.
And that would imply certain tightness in the silver market. Plus, you made the statement that bankers are cautious, but I would argue with that, because they're not cautious with other people's money, the taxpayer money
not.
or somebody else's money. They're cautious with only their own money, and then when they get into trouble, they get bailed out by the government for the most part that they own. So that that's a bit of a interesting statement.
I should qualify. That's the bankers I know. Then.
Right. Okay. Now we've got about 2 minutes, and I want to talk about something that I think it doesn't get enough attention. I heard you speak yesterday, and you got a good handle on it. Austrian School of Economics. Sandeep Jaitley, what is the Austrian School?
The Austrian school is the school of Karl Menger. Now, Ludwig von Mises, we've all heard of, he was a second-generation student of Karl Menger. But Karl Menger was the founder of the Austrian school, and he founded it on only one axiom. And that axiom is that value does not exist outside of mankind's consciousness. So basically, all other forms of economics, classical, neoclassical economics, ascribe value to something else other than the human mind. So this concept gave birth to marginal utility, which I'm sure many people are familiar with. It's the border use of something that determines its value, and the economics of border use is the Austrian school.
Okay, now,
simple.
So consciousness is where the axiom upon which the economics of Menger and the Austrian school rotate. Now, this implies a high degree of subjectivity, and in the Austrian school, because they take into the psychological and mass psychology, it's almost Freudian. It would be Freud meets, that's the point, isn't it? Because these other schools of economics, they tend to approach economics empirically, but what we've discovered is that it's completely irrational, especially with the behavioral. Doesn't the behavioral economics model that's come out in the last couple of years and won a couple of Nobel Prizes, doesn't that completely legitimize and emphasize the school of Austrian that you're talking about?
It does, but Max, you have to. I'm a mathematician, and it's taken me quite a while to realize that most of the equations, all of the equations in neoclassical economics are rubbish. They're vacuous. The differential equations describe nothing. Economics is not about mathematics, it's about the human being. Maths is just a language. You know, if you have no philosophy, then it's useless, and they have no philosophy.
Right, and in the 2008 crash, these banks said that, well, our quantitative analysis was wrong, and the risks that we thought we had hedged, it didn't work out. And what you're saying, what the Austrian school would say, is that that was baked into the cake from the beginning, because
Absolutely.
It's impossible to come up with a mathematical formula to quantify and predict the machinations of the collective unconscious, effectively.
Absolutely, Max. And it's obvious to me, but it's obviously not obvious to them. I don't know why.
Right, okay. Well, that's all the time for we have, actually. And I want to have you back on again soon to get into this a little bit more, because I think that with Ron Paul now slated to be the Inquisitor, grilling Ben Bernanke on his irresponsible flagrancy by destroying the U.S. and global economy, we're going to need your insights going forward. So anyway, thanks for being on the show, Sandeep Jaitly.
Thanks, Max.
All right, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert, and my guest, Sandeep Jaitly. His website is, let's see, what is his website? It's called bullionbasis.com. If you didn't understand something, go to that website and check it out. If you want to send me an email, please do so at keiserreport@rttv.ru. Until next time, this is Max Keiser saying, bye, y'all.